around, say, sometime December 25, they would be completed.
Okay. So the second question is on the railway. So now you have added new orders in the railway segment when some of the peers are exiting. Railways have cut down their exposure given the milestone-based payment issues and working capital issues, right-of-way issues. So how do you read this while taking these orders? Do you think these will be profitable and they'll not pull down the overall blended margins for the company?
See, in railway projects, earlier, whatever railway projects were being offered, they were very small projects, and I think within just last 3 years, the lump sum EPC project has been started in the railway projects. Now, they are also working on the same model as NHA has worked almost 15 years back. So now they are figuring it out very clearly that the decision has to be given and the land, if it is available. So there are two major factors. One is the decision, and I have seen that there is a significant change in even the schedule of milestone where the payment shall be made. Even it is better than NHA. And NHA are also looking into, say, change in their, payment schedule where they already has given last 2-3 years in Atmanirbhar. Now they are following the same model that cash flow is very important. So it was last many years that this definitely railway struggle was there. But we have seen a significant change, and I think for 2 lakh crores of projects they are to be executed plus, and it's not only railway electrification or signaling and transmission. They are all civil, and it's a DFCC or even the high density corridor where the construction of viaducts are there, even a station. They all require this sea change, which I believe they have already have initiated.
But what is the difference in the net working capital days here versus the road segment? So I think we are at about 30, 31 or 35 days of NWC. Do you think that that will see a deterioration and the revenues from the railways go up?
No, I think as we have experience in metro, definitely it's a working capital cycle has definitely skewed very high, and no doubt. But in railway, we have seen we are working in the railway projects for Bilaspur, we are getting very timely payment. Every month we are getting in Kanpur also, whatever we build, we usually are getting the payment. So not much of a contract asset or unbilled is being created over there. But definitely some portion is there. But again, as we have seen, there's not much of the stock is to be built up in these kind of a project, where in highway it is very much required. So there are mix of it. But in any case, we are getting monthly payments where almost Schedule G and Schedule H are very exhaustive.
Okay. This is the last question on the BOT opportunity. So you will play through subcontracting, or you'll also directly also bid for some of the BOT toll projects?
As of now, we are not at all interested in BOT toll. We are already, that's like Adani, we are working. This is the second project we are working. We work for 4 projects. And this NIS, they have approached us and even Q. So we look forward to this opportunity working as a EPC contract support to these companies.
Okay. Okay, sir. Thank you, Mr. Damas. Those were my questions.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your questions to 2 per participant. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah. Good morning, sir. Thank you for taking my question and congratulations on good set of numbers. So first request is you can send the HAM projects breakup between equity and debt and the grant received, because it is not...
Jiten, a bit louder. Your voice is not very much audible.
So you can hear me now? Hello?
Fine. Yeah.
Yeah. So the first request, if you can share the HAM projects breakup, which you usually share in the presentation in terms of equity, debt, grant, and which would be really helpful. I think this is not part of our presentation this time.
You are talking of HAM equity requirement?
Yeah, HAM breakup of equity, debt, and
I can just give you. There is a 1,451 crore, which is the total requirement, equity requirement. 694 already has been infused. The balance equity in road is 767 crores, out of which we are assuming that in the year 25 we would be doing that 505 crore, 26 131, and followed 131 in 27. So this is for road.
So you said 504 crore in 25?
25 is 505.
505. 26 how much, sir?
This is 131 and balance 131 is 27.
In 24 we have used 694 crores.
Till 24 we have already done 694.
694. But if you can give the breakup in Excel, because you are used to give in presentation. So
I think it's a long list of around 10 projects. We definitely would be providing that.
And sir, coming back to the question on solar and just harping on it. So, if I may understand correctly, this is a 65-35 JV. And sir, the project is for 543 megawatt, which is also will be done in 65-35 JV, right, sir?
Yes.
Achha. And sir, on the tariff, you said 3.72. And sir, what will be the total project cost? I'm not talking about the EPC cost. What will be the total project cost on which you are calculating equity IRR of 14%?
So it's not 15%, it's the equity where the GST has also been considered. It's around 2,300 crore rupees.
So when you are calculating the IRR, you are including the GST, right, sir?
Yes, of course. But these
So
are
this 2,300 is 2,300. Okay. So this 2,300 crore is your share or it's a total project?
The total project 2,300 odd crore rupees, which we have considered 5 crore rupees.
Sorry, sir. Can you please repeat? I couldn't get you, sir.
If the total project value is for 2,340 crore rupees, and
Okay.
no, so they are talking of the total project value. So put together for us as well.
This is including GST. Hello.
Yeah.
So this your share will be 65%, and you will be investing 540 crore, including which will be including GST, right, sir?
Yes.
Okay. And sir, what will be the PLF? It is mentioned 19%. So you are targeting anything higher, or you will maintain the same PLF?
No, the PLI here is the
PLF.
It's not PLI. So basically, we are getting average around 27 lakh rupees per megawatt in these projects as an assistance. So there's a subsidy being provided to us while we are commissioning these projects during the commissioning.
This subsidy will come to the parent, sir?
Yeah, of course. Say, as a developer, we are doing two arrangements. One is the tariff which we will be getting from the DISCOM on a monthly basis. And the second is while we are doing this project, as being commissioned, we will be getting this particular, this is roughly, this varies from project to project, but it is roughly around 27 lakh rupees per megawatt.
Thank you. The next question is from the line of Anupam Gupta from IIFL Securities. Please go ahead.
So just continuing on the solar projects. So here you said you have tied up the procurement, but what are the clauses? Is the escalation, whatever happens, is it to your account, or are you able to pass it on to the...
No, not at all. Say, in these projects, the escalation is to our account only. We have earlier considered, but fortunately, we are getting this project being estimated from whatever estimate which we have done, and the procurement prices are much lower. It's an all-time low.
Okay.
Yeah.
Understand. And in terms of, so you said there is an O&M of 15 years. So once constructed, you will maintain the...
It's 25 years.
Okay. So, and the overall project life is also 25 years. So the 3.27 per unit, which you said, you will get it for 25 years.
Correct.
Okay. And the subsidy, sir, which you mentioned, 27 lakh per megawatt, is it coming to the SPV or is it coming to HG Infra during construction?
No, it is coming to SPV, but definitely we have considered certain portion to be passed on to EPC.
Okay. Understand. Okay. And the second question is on the margins front. So you have obviously diversified into railways, solar, and you're talking about going into water also. So far, the contribution has been very small in terms of revenues, but incrementally as you go to FY25-26, obviously the share will go up. So what sort of margin trajectory should one expect? Should you go down, let's say, slightly to closer to about 15-14%, or you'll be able to maintain these levels?
So as of now, which we have seen as far as past experience of the project which you already have having the hand, and furthermore, which we would likely that we for the year and all, we doesn't see much of a dip from this. Say 15% is the lower side which we have considered.
Okay. Understand. And you said in terms of monetization, just coming back to solar again, just in terms of monetization, you plan to monetize this, or what is the how do you look at it once the project is completed?
No, see, there are many other projects which they already have seen, but because this is solar, do not have a long story, which we had seen that there are a number of projects available in the market where being monetized. But definitely, yes, now onwards, there are not many parks and the parks with these projects being commissioned. So, and it's the total interest of the funds where the equity IRR being maintained, And this is a very less O&M cost. Say, just we have seen that 4 to 5 lakh rupees per annum per megawatt is the O&M cost. It's not like, totally not like roads. Where in roads or any other projects which we have done, O&M is a big risk. Here it is not a risk. So we would be able to do that.
Okay. Understand, sir. No, that's all from my side. Thank you.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir, and congratulations on a very good set of numbers. So my first question again on this solar, sir. In this particular sector we are taking a discount risk. Isn't this unrelated sector? Are you thinking of scaling this business up, or this is a one-off?
No, definitely the entry into this sector is just so not a matter. It's a strategic kind of a decision being taken where looking into the shrinkage of HAM projects in NHAI, where the margins are not that big now, and even the NHAI is coming into many projects on a BOT mode. So with that, we have taken that, and we would be looking into this diversity where it's not only for restricting the solar park, rooftop solution, industrial. There definitely the margins at both the level, EPC as well as equity IRR, should be maintained. That we already had guided that initially also. So, but looking into the back end into the any module manufacturing also cannot be ruled out in that case.
And this is looking at a larger play in the solar. Is that right,
Yes.
understanding?
Yes.
Understood, sir. My second question is on the pipeline for the NHAI. How confident you are that in this year the NHAI will bid out more HAM and more BOT asset? You did mention 2 lakh crore, but I think of the pipeline which stands today is around 50,000 crore, which is still not getting finalized.
You're sure that initially I think they are talking for BOT pipeline of around 2 lakh crore, but initially I believe that they are prepared with only 50,000 odd crores of project on BOT. But for sure there are many HAM projects in the bidding pipeline. EPC definitely are not a big number in now project. But as the cabinet approves this Bharatmala, which has been now scrapped almost, this is a new document which is going to be approved, where entire 2047 and 2035. I think there are 2 milestones which they are. There are 20,000 odd kilometers on the greenfield projects also to be developed. So I think it's not that they are all dried up, but it may take some more months, few more months this year. But they are very, and we are also very much hopeful that we will be awarding around 6,000 odd kilometers during the year, and it be on whichever mode.
This includes HAM and BOT, right? 6,000 kilometers.
Yeah,
is that right?
Kilometers. Yeah, so roughly it comes to be 1.5 lakh crores.
Okay, sir. And how do you think about this? Is this a Maharashtra tender? Do you think this will get finalized the next couple of months, or it will take its own sweet time?
No, I think it got delayed because of the election only, and now it's very much clear that already RFQ done, RFP has been received, one tranche they already have received, second tranche also that has been received. With that, I think, I believe within a month or so it would be all opened, and this opportunity for all, it is all available, I think.
Thank you. The next question is from the line of Ketan Jain from Avendus Spark. Please go ahead.
Yeah. Hi. Good morning, sir. I have two questions. The first question is on the interest level. Sir, what type of what interest rates are you seeing at a project level for a HAM project and for a solar project?
It's almost similar for solar HAM or these highway HAMs. So we are having around 8.6%. This is the recent that we are done.
8.75 to
8.75%, which we recently has concluded, Jharkhand package 10 and 13.
Achha, okay. So my next question is on solar EPC margins. Like, what kind of EBITDA margins are you looking at solar EPC? Because peers like Tata Power and SW report only around 5 to 7% of EBITDA margins.
So we have already calculated. There are 2 things. One is that we have discussed is some financial assistance being passed on per megawatt. That is around 5 to 6%. This loan is around 5 to 6%. So if 4 crore rupees per megawatt is the development cost, EPC cost, which we are assuming. So out of that is 20 lakh rupees is around 5%. This is one part. And about 5%, we are also expecting around 8 to 10% in the execution, wherever the supply chain and everything, procurement, with the margin, which we have seen that this is a decent one, which we would be doing that.
Okay. And also, are you going to take turnkey, like with modules, contracts or without modules?
This is all with module only. These are the contracts which is to be done as on turnkey basis, where entire commissioning being done, and I think we need to sell the power to DISCOM. So this is the ultimate aim for development of this. This is a captive project.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, hi. Thank you for taking my question and congratulations on a good set of numbers. So my first question was with respect to our intent to kind of get into water segment. I mean, I think you spoke about getting into desal and water treatment as well. So how do we intend to take care of the qualification requirements? I mean, would you have somewhat similar sort of arrangement that you have for, let's say, solar, wherein you went with a local player, or the idea would be to kind of, let's say, build your own capabilities there, which could take you a little time to be able to have everything in place?
So we are working on both the options. One is, I think, one small company which do have this PQ available, where they are doing this business for last few years. So there's one part which we already are discussion at advanced stage is one, and second is strategic partnership through consortium and to looking into this opportunity. Because we have seen in last year, because in the Rajasthan state itself, 15,000 crores of order to be awarded. So because of the model code of conduct of Rajasthan state, later on now central elections are there. So this I believe that in every state JJM plus other opportunity, even they have opportunities, this water desalination plant, water treatment plant, sewage water treatment plant. Water is a big sector, is going to be a big sector in coming years.
In terms of solar, so if I mean on the face of it looks as if, I mean, the return profile is somewhat inferior to hybrids, right? Because when I look at what you bid for 2,300 crores, you're supposed to infuse almost 540 odd crores, which is 20% sort of number. And then when I, let's say, compare it with hybrids, generally you tend to invest 15% of the total project bid cost, right? And the margins are somewhat similar. You're saying 15-16% is what you'd be able to have. Even in terms of project equity IRR, again, is somewhat similar. So here the equity requirement appears to be on a higher side. So does it mean, I mean, on an overall basis, I mean, it is somewhat inferior, or you believe in the numbers?
What is the total model about? So there's an entire portfolio of 100, let's say 528 megawatt. In that, the equity commitment, which is per se what we have discussed with our consortium partner, that we are entering into this where the PQ and everything is available with them, that the entire equity is being done, where the return on equity is around 15% is rest assured, as while arriving at the EPC cost. So this is one part. And EPC of 35% will be done by the partner Stockwell and 55 by HG Infra. So this is the association which then we definitely will be building our team, because they already are into this particular sector. So what is important is that we are looking into not into equity IRR at a say for 528 megawatt to be developed, that is available, and just again our own portion of EPC.
Thank you. The next question is from the line of Shubham Shelar from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. One is, like, in terms of equity investment, 405 crore in FY25, does this include the solar or it's only HAM?
Yeah, 505 is the road HAM project.
Okay. So including solar, I mean, any number that you can share?
775 crore, which is expected to be say infused during FY25.
Okay. And a similar number for 26 could be how much, sir?
No. 26 is with these projects in hand, it's under just 400 crore rupees, including solar of 270 crore rupees and 131 crore from roads.
Okay. And this 1,300 crore EPC for the solar, does this also include the O&M for the 25 years, or it's only EPC, pure EPC?
No, it's a purely EPC cost to be booked within next 1.5 years. So that's the maximum. And as I was talking about the O&M cost, these are not a very big cost that SPV they would be doing, and SPV is going to get the revenue from the power being being sold out to this discom.
Right. And one last question. I think one of the subsidiary for this solar work that we have made, it is named as Green Hydrogen Power. So, anything more to be read, like, you know,
we are looking into some hybrid because nowadays going further, it is a wind hybrid as well as the other hybrid model to be there, where the green hydrogen is also a hybrid model, where if you are producing power from solar in one area and let's say definitely swapping it out with the hydrogen being produced elsewhere.
Okay. So maybe like going ahead, there could be certain plans which is parallel to moving it.
Getting the company registered with the government of Rajasthan even. So this is one part of it because you need to get registered.
Okay, fine. That's all from my side.
Thank you. The next question is from the line of Harsh Mulchandani from Chris PMS. Please go ahead.
Thank you for the opportunity. Wanted to understand that we've even incorporated a subsidiary for hydrogen. So what exactly in the space of hydrogen we would be looking at? If you could just help us understand.
So it's a very initial stage because we need to get ourselves registered in this hydrogen space. Say in every state do have their obligation where we need to register ourselves first. So this is one part of it, getting registered. Post that, any opportunity likely to come from state or central schemes that we are keeping ourselves open for that.
Okay, got it. And in case of solar, so after this project, say we have enough competence, so we would be bidding for new projects individually, or we would again look for JV mode itself for even future projects?
But till the time we execute these projects, let's say within a year down the line, we may have the PQ, in-house PQ. We do not require such arrangements where the partnership would be done. But by the time, if we require any project where it's a decent margin, everything is available, we will definitely would be doing in partnership.
Fair enough. Thank you.
Thank you. The next question is from the line of Yash Dedai from Maximal Capital. Please go ahead.
Hello. Thanks for the opportunity and congratulations on the good set of numbers. Sir, I just wanted to know firstly about the solar EPC. So solar EPC, our share is 1,300 crore, right?
Yes.
And that came from project value of 23 crore. And what is our share from 23 crore? Because if 65% is our share, then it would be around 1,500 crore.
Say that 2,340 crore rupees inclusive of GST. This 1,300 is 55% excluding GST. So this is how it is coming from.
Okay, it's not 65, it's 55%. That's what I was.
It's 65%, 65. That is excluding GST.
Okay. And sir, our margin guidance is 16% for the coming year for this FY25. This is EBITDA margin guidance, right?
It's EBITDA, yeah, 15 to 16 range.
So our current EBITDA for say FY24 was around 19%.
No, EBITDA remains at 16%. It's 16.2% for the year. I think console. As a consolidated, you are talking of the console level.
Yeah.
We are talking about standalone.
And the consolidated margin would be around?
It's roughly around 2% plus over the margin which you usually make in EPC.
So it would be around 18% then?
Yes.
Okay. And I just wanted to know about the recent project wins which we had. So the amount of contract for which we bought, which we bid for, and the estimated cost from the authorities were not matching. I mean, the estimated cost was higher than our bid cost.
They all are inclusive in railway project. They are all inclusive of GST. So we have taken out GST out of that because the order value is coming excluding GST. This is one part where the correction has been done. And the one project of highway which was on HAM. So this is around 85% or 86%, which is the EPC value to HG Infra has been considered while calculating this total order received.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your question to one per participant. The next question is from the line of Prateek Bhandari from AART Ventures. Please go ahead.
Hello.
Yes, sir, you're audible.
Yeah, thanks for the opportunity. I wanted to understand about the order inflow of this particular quarter, that is Q4. What was the quantum of it?
So mostly the orders which we receive is on Q4 only.
Okay. So what was the quantum of it?
It's around 2,240 crore rupees which we received in Q4, that is railway, to highway and solar projects. And just a small 100 crore rupees which we added in Q3, that was the NTPC transportation, where we are already engaged in doing some projects of NHA with the transportation being done by us from NTPC power projects.
And during the year we received the order inflow amounting to 4,350 crores, right?
Yes.
Okay. And also wanted to, get a sense of your capex plans for the coming, FY25.
And that is not a big number. It's around 100 crore rupees. And we are also looking at some phasing out of some of the equipment. Around 25 odd crore rupees would be sold out.
Okay. And what would be the execution timeline?
Sorry to interrupt you, sir. May I request you to please rejoin the queue for your follow-up question?
Yep.
Thank you. The next question is from the line of Dhivij Patel from Finterest Capital. Please go ahead.
Hello, am I audible?
Yes, sir, you're audible.
Yeah. So just wanted to understand, we have a very well diversified order book as of now, and so we have completed most of them. We are near to completion for some of them as well. So I want to understand the process of payment. So at what stage do we see these projects contributing to our top line or bottom line and so on?
Sorry? I couldn't get your question.
So I wanted to understand the process of payment for these order books, as and when these orders are completed. How do we see the money inflowing?
In all the projects, we are getting monthly payments.
Okay. And
milestone achievement.
All right. And another question which I had was, so we've seen some slight, drop in EBITDA margins. So should that be a point of concern, or are we expecting these margins to stabilize from here on?
I think there is no dip in the margin as of now. It's almost 15.7 to 16% range during the last 4 quarters, or even more than that.
Thank you. The next question is from the line of Kaval from Summer Wealth. Please go ahead. Mr. Kaval, can you please unmute your line from your end? Due to no response from the current participant, we will move on to the next participant. The next question is from the line of Uttam Kumar Srimal from Axis Securities Limited. Please go ahead.
Yeah. Good afternoon, sir. Thanks for the opportunity. Sir, just wanted to know the entire equity requirement for HAM as well as for a solar project. This will be made out of internal accrual or what?
So entire equity requirement over a period of 3 years is all manageable for the internal accrual. And definitely just to add to it, so around 200 odd crore rupees which we will be receiving during the year, this quarter tentatively, is also going to help us infusing the further equity requirement where the monetization was already been concluded.
Okay. And sir, debt level will remain at the same level, or there will be some increase in debt during the year to execute these projects and all?
Sorry?
Debt level?
Debt level. No, debt level definitely is a mix of all equity and debt. But the debt level which is now...
No, I am asking, sir, the current debt, this will increase further or this will remain at the same level?
No, debt at standalone remains almost similar level. It's around 450 crore rupees. It is not likely to increase much. In any case, it would be around 500 crores range. But at the SPV level, at the consolidated level, whenever we are doing any project where the captive, being done, so these are the captive projects or assets being built, which definitely the debt would be increased.
Okay, sir. Okay, sir. That's all from my side and all the best.
Thank you. The next question is from the line of Tushar Ghatate from Kamakya Wealth Management Private Limited. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. So happy to see the diversification in the company. Just wanted to understand for the next 2 to 3 years, how do you see the order book panning out, like for the railway, for the water EPC? How do you see that? Your answer.